Now, just to provide further evidence of the analysis that was provided to the VIP clients and to those on TradingView, I'm just going to show you the trade itself. So this was the position once it had finished. Perfect. So you can see here that on July 19th, I sent out this analysis, and you'll see that this correlates with my post in the VIP chat. We wanted to see price trade up and into this supply zone for price to then trade down into here. This is where our take profit was set. How are we getting on, people? Luke here from LAGFX. We are back today with a new top trades of the week video. If you are new to this series, it is basically where we go over some of the best positions that we have placed in previous weeks, giving you a great rundown on the analysis we performed prior to placing the position, how we went about executing the position, and then how we managed the trade whilst it was running. Now, the trade that I'm going to go over today is this Euro US dollar short. This trade lasted no longer than 5 days, and it generated us with a 1 to 18 risk to reward ratio. The swing that we capitalized on was 170 pips, and we did take partials throughout the position. Now, the purpose for these videos are to not only give you a better understanding on how we perform as a team, but it also helps you understand the analysis that is performed to generate brilliant trades like these. If you do go on to enjoy this video, don't forget to leave it a thumbs up. And if you have any questions or queries regarding the analysis performed or the trade itself, please leave them in the comments below. Now, without further ado, let's jump straight into today's top trades of the week video. Okay, so the first thing I like to do before placing any positions in any market is, when I come to complete a full top-down analysis, is to distinguish what the overall structure of the market is saying. So we can see here that this market has been trading us very much within a bearish way. Price has depreciated over the years, so we therefore want to be looking for bearish opportunities. The reason why is because we want to be trading with the majority traders. Now, this doesn't mean to say that we can't look for buy opportunities. It just means that when we do look for buy opportunities, we need to be aware that we would be trading against the prevailed trend and the majority traders that are active in this market. So just to highlight some swing points, we can see that we have a high set, followed by a low, followed by a lower high, followed by a lower low. We are now in the midst of another corrective wave, trading price higher. We have this as a point of interest right here, where we suspect price will go on to create a lower high, and then what will follow is a lower low. So with this, we have a clear bias and a direction to trade in, and we have also marked out the swing points within this market. Now, as we understand, price is within a corrective phase in a higher time frame bearish market. That means price is currently trading us in a bullish way. As we come closer to present time and present data, we are able to get a better understanding on the fractal nature of this structure. So as I just mentioned, we are within a bullish corrective wave within this higher time frame bearish market. So the strongest trend is obviously going to be a bullish one, but again, we understand that the overall structure of this market is bearish, and we should realistically be looking for those bearish opportunities. Now, as you'll notice, what I've gone ahead and done is marked out a potential sell zone. This is somewhere that I will be looking to place sell positions from, assuming we are delivered with that higher time frame confluence. What we want to see is for price to trade up and into this, deliver us with a higher time frame break of structure to the downside. That will confirm an end to this corrective wave and the start of the next extreme higher time frame impulsive wave trading goes lower. So moving more to present time and closer to our trade itself, we can see how, as price is within a higher time frame corrective wave, trading goes in a bullish way, we have the production of higher highs and higher lows. As you can see, each impulse follows by a corrective wave. What we can look to do is obviously take full advantage of the impulsive waves, as that's the current trend within this market. But as this is a bearish market, we should be looking to capitalize on those bearish corrective waves within the fractal nature of the structure as well. And that's exactly what we did with this position. So now looking at the 4-hour time frames and having a look at this position itself, you can see here how we capitalized on the fractal corrective wave within this higher time frame bullish correction. Now, our opportunity to actually get involved in sell positions came after a penetration of a higher time frame supply zone. Price traded into a supply zone here, which if we drag our cursor all the way across and look at the previous impulsive wave that traded us lower, you will see that right here there is an unmitigated area within price. Now it may not seem as though there is, but if we just drag this all the way across, just highlighting where price penetrated like so, and then if we go back down on time frames now just to highlight this area on the lower time frame, so just press the replay button, just go down to the 1 hour, you will see that what we have highlighted here is a clear unmitigated area in price that price needed to come and trade up and into before taking us lower in this market. Now I can distinguish zones in areas like this just by looking at these open and closes of candles. Now this obviously comes with years and years of reading the charts, but if you are struggling to find order blocks and unmitigated zones in price, then just go down to the lower time frames and they should display themselves. As you can see on the 1 hour time frame, it clearly displays itself here. So just going back to the trade itself, as you can see, price put in that impulsive wave. What had to follow was a corrective wave before a new impulsive wave was to take place. And that's exactly what we took advantage of. We took advantage of the corrective wave. The reason being is because the corrective waves within this fractal structure is following the higher time frame bias, which is to be short in this market. So we understood that by going short in this market, we are able to capitalize in complete swings. So what we did is we highlighted the last protected low within this bullishness, which was this one here. We'll go down to the 30-minute time frames or even the 15 minutes. This will show itself a little bit more clearly. As you can see, this low here went on to set this high. Within this fractal structure here, this is the highest point, and this low was what created this highest point in price. Therefore, this is the last protected low. So when we saw price break that, that told us that we are no longer following the laws of bullishness, and we are now following the laws of bearish structure. As in bearish structure, we break the lows and we protect the highs. So once that happened, all we wanted to see then was for price to pull back into a fractal supply zone that would highlight itself from the impulsive wave that broke the structure, which was this to this. We managed to find one, and if we go down to the 5-minute time frames, it should highlight itself. Perfect. As you can see here, we have highlighted this last buy to sell region. Price came to trade into this. We were then delivered with another break of structure to the downside. So that tells us that the initial correction after the higher time frame break of structure has finished, and now the higher time frame impulsive wave is ready to take place. So all we did then was we waited for price to break structure, as it has done here, and for price to put in the fractal correction within this fractal break of structure. As you can see, price came to trade up and into this supply zone here. We had rejection to the downside and another break of structure. Price then came back up to trade into this unmitigated candle here, this green one right here, and then we were delivered with that bearish structure. Now I placed my stop loss just above here, as this was just above the zone and price had already come to clear that zone. So when we entered our positions here, we knew that price realistically shouldn't come to trade above this stop loss. Now throughout my explanation, I will have shown befores, durings and afters of the analysis that I performed, as well as how the trade played out. But the brilliant thing about this strategy is we are able to capitalize on entire swings like this with very refined entries. Reason being is because we are looking for the penetration of higher time frame supply or demand zones. We are waiting for the breaks of structure to take place, and then all we wait for is for price to pull back into a fractal supply zone that will find itself from the impulse that broke the structure, which was this one here. Then once we have found a fractal supply zone, we simply wait for price to trade up and into that, for price to break structure to the downside again. So we are literally just copying the same process that we did originally. We waited for price to trade into a supply zone, we waited for the break of structure. That's all we are doing here. We wait for price to trade into the supply zone, we wait for the break of structure. That's what we did. We then highlight another fractal supply zone, just as we have done here, and just as we have done here. Once we've done that, we simply wait for price to trade in. And because at this point, we are then looking at the 1 and 5 minutes, our entries can be extremely refined. And that's how we managed to get this refined entry here. As we are able to set our stop losses just above these fractal zones, these fractal supply zones that we are getting involved in. And we can set our take profit targets at the higher time frame swing lows, because we can guarantee that price realistically should go on to trade us down and achieve our take profit target. because we are actually getting involved in a higher time frame swing just with a fractal entry. Now, as I mentioned earlier, this trade lasted no longer than 5 days, generated us with a risk to reward return of a 1 to 18. So if you're risking 1%, you're looking at 18% returns if you didn't take any partials. And with this position, we had little to no drawdown at all. Now, just to provide further evidence of the analysis that was provided to the VIP clients and to those on TradingView, I'm just going to show you the trade itself. So this was the position once it had finished. Perfect. So you can see here that on July 19th, I sent out this analysis, and you'll see that this correlates with my post in the VIP chat. We wanted to see price trade up and into this supply zone for price to then trade down into here. This is where our take profit was set. So you can see that price played out exactly as we predicted, and this was the swing that we capitalized on. So with all that being said, if you aren't following me on TradingView, I'd highly recommend you go and do that, as I send out analysis on there on a day-to-day basis. And if you aren't involved in the VIP chats or some of the services that we offer, then I'd highly recommend getting involved in those as well. This was just a perfect example of my strategy working to a T and some of the returns that we can expect from this working strategy. Now, what I'll also do is throw up some messages from clients who got involved in this position, so you can see that not only I took advantage of this trade, but so did the clients as well. Now, that is going to summarize this top trades of the week video. I hope you guys have been able to gain a better grasp of how I like to trade and how I like to analyze the markets. And I hope the way that I explained this trade made plenty of sense. As I mentioned earlier, if you have any questions regarding the analysis performed or the trade itself, please leave them in the comments below, and I'll be more than happy to get back to you. Now, I hope you guys have enjoyed watching this video, and I'll catch you all in the next one.